as I was saying, we having our demand levels. So this blue box I've just highlighted here is sometimes you might have an impulse move to the upside, but then price might be creating demand levels or demand zones as price is pushing to the upside, because we can't just have a strong green candles pushing to the upside. You might have bearish candle, which will be like in the form of a correction, then there will be a push, then there will be a correction, then another push. So as price is coming down here, this is still in the premium level. So as price is coming, sometimes you might see price reacting to this level, which will give you some indication that price is actually going up. Then boom, we see price coming all the way down, hitting people who started buying here, hitting their stop losses. You understand? Then we see people also taking their entries from this next demand level here. You understand? But what is price going to do? Price would actually react to the zone, try going up, then price will still break below that structure again. You understand why? Because price is targeting the demand level in this discounted price. You understand? Here you are buying in a premium price and nobody wants to buy something which is already expensive. You need to wait for the thing to go on a discount sales or discount price before we start buying. You understand? So you identifying trade demand levels on this strong impulse move to the upside. You need to make sure, you need to be able to refine them. You need to be able to refine them and also know that okay, right now I have two demands in the premium level and one demand in the discount level. So if you see people demanding for something which is already expensive, what's the probability that they are going to buy? You understand? The thing needs to go on the discount price before they would actually start buying. You understand? Before they will actually start buying. So price might react. Price might react to this demand level here, but still come all the way to break it. Price might react to this second demand here, then still come all the way down to break below it. Why? Because those levels are in the premium channel. It's still expensive and nobody wants to buy something which is already expensive. You understand? So you having three demand levels on one whole impulse move. You can't take a trade here, then the trade will hit your stop loss. Your stop loss might definitely be here, and this your risk reward will even be 1:1, 1:1. It doesn't make any sense. You understand? It's not worth it. And if price comes all the way down here, hitting your stop loss, we see people still trying to buy from the next demand here, targeting here, price will still hit what you expect plus because you are buying in the premium channel. You are buying as the thing is still what's expensive. You understand? So what you are going to do is you need to wait until price comes all the way down into your discount level. You understand? So you identify these two demand levels. You need to tell yourself that, oh, okay, I have three demand levels on this whole impulse. Okay, then let me refine it. If I'm refining it, I need to know these first two demands here because they are inside what? They are inside the premium price. You understand? And what do? We only sell in a premium price, then we buy in a discount price. You understand? You need to wait until price comes to this our discount zone before we start buying. So right now we are going to ignore this demand and also ignore this demand. Then we focus only on this demand here because we find this demand below our um discount price or inside our discount price. You get it?
Yeah.
So right now, what we are going to focus on is how to take our entry when price gets into what our discount level. So we are only going to take our entry on how price reacts around this demand zone in the discount price. So that's what basically I was telling you the last, like I was saying earlier on, that whenever we have a strong impulse move to the upside, the pullback which happens like this on the higher time frame, actually a whole different trend. Let's say this is the 4-hour time frame pullback. You understand? Let's pulling back on the 4-hour time frame. But when you switch to the 5 minute time frame, you see price creating its own what lower low and lower highs. This is basically how you will see it on the smaller time frame as price is actually what pulling back. You get it?
Yeah.
So for you to create this whole impulse move the right way, you need to know that the pullback which will be happening on the higher time frame as just like some 2, 3 candles like this. If you go to the smaller time frame, you are going to see a whole different trend on the smaller time frame. You understand? That's where you see people making the mistakes of what selling inside at this demand level, even after price has mitigated that level. You understand? So if you want to be on the safer side, you need to know that as price is actually pulling all the way down to retest its demand level on the higher time frame, let's say the 4 hour time frame. When you go to the 5 minute time frame, price is actually doing something like this. A push to the downside and exhaustion, push, exhaustion. Okay, this is basically what price will be doing. Real market price, this is what you see price doing until price finally taps into your demand level. You get it? Until price finally taps into your demand level. The mistake most people do is you see when price was retracing from the top here, when price was retracing inside this premium level, what did we have here? We had this market strata shift, right? Can you see that?
Yes.
We had this market strata shift when price was pulling back. Okay, this market strata shift. But where did this market strata shift happen? It happened inside our premium channel. It happened inside our premium price. It has not even gotten to the equilibrium, which is the 50% of this whole impulse move. So the mistake most people do is the moment they see this market structure shift here, then they will start identifying their demand levels here to take what? To take an entry to the upside. You will take the entry, price would actually react to your entry. You'll be targeting here, right? Because if you're taking an entry, you are targeting the previous side. Price would actually react to your level, try pushing up, then you see price pulling all the way back again. You think price is coming to generate some liquidity here to push to the upside, but then price will come all the way down here, push and definitely hit loss. Why? Because you are trading against the higher time frame uptrend. Sorry, the smaller time frame downtrend. You understand? So we avoid any kind of reaction, any kind of manipulation we see in the premium channel until price comes all the way down into our discount price before we start looking for an entry. So whatever price is doing here, the main important thing to do is rather be looking for some short-term sell entries as price is coming from this premium level here. If you can't wait for price to come all the way down to your premium discount level before you start buying, then rather be taking advantage of this short-term downtrend on the smaller time frame. You understand? You can be taking some small sales here, and when price taps on the 50% of this whole move or the equilibrium of this whole move, you stop selling because right now price has left its premium price and is going to the discount price. And we don't sell in the discount price, we only buy in the discount price. You get it? So when price is coming down here, what we are waiting to do is to see price tap into our higher time frame demand level inside our discount price. And when price taps in, you need to know that the smaller time frame is telling us that we are what? We are in a downtrend. The smaller time frame is telling us that we are in a downtrend. So since we are in a downtrend, what do we want to see? We want to see the smaller time frame also telling us or also speaking the same language that the higher time frame is also speaking. You understand? Higher time frame is saying we are in an uptrend. Smaller time frame is saying we are in a downtrend. So for us to start taking trades, we need to see the smaller time frame also telling us that okay, right now the smaller time frame downtrend is over, then we are coming to continue the higher time frame uptrend. When you see something like this in your point of interest, then that means this trade is confirmed for you that you might have your liquidity taken here and an immediate market strata shift or change of character on a smaller time frame. The moment you see this, this should tell you that right now the smaller time frame downtrend is over and what we are coming to continue our higher time frame uptrend, because previously on a 4 hour time frame you're already in an uptrend. You get it?
Yeah, I'm getting you.
Yes. So the moment we see this on a smaller time frame, this is telling us that okay, higher time frame is saying we are in an uptrend. Smaller time frame we're pulling back. So we are having a smaller time frame downtrend inside the higher time frame uptrend. This is where most people confuse themselves in trading the market structure strategy. You understand? Because when they see price pretty lower, so like lower lows and lower highs, they will be selling, 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 selling until they will just keep selling. But the only time you can actually sell is for you to know where we have your higher time frame premium level, your higher time frame discount level. If you are selling inside your higher time frame premium level, that's a bit okay. But when price taps into the 50% of this whole range, that's the equilibrium. You need to stop selling. Then wait for price to tap into your actual structure here, which is the higher time frame demand levels. The smaller time frame needs to be speaking the same language as the higher time frame is saying. Higher time frame is saying we are in an uptrend. Smaller time frame is saying we are in a downtrend. But when price got all the way down here, this is where we become very interesting, or this is where we actually monitor what is happening here. You can either be doing whatever you want, but when price gets into your zone, this is where you come to the charts. Then you try putting your confirmations together. What is smaller time frame saying? 5 minute time frame is saying we've had a market structure shift here. Okay, then
Yeah.
what am I waiting for? I just need to identify my small pullback inside either it's a fair value gap we have here or it's a demand level we have here. Just a small pullback. Then you pick your entry. Then you target this highs here as your take profit. You understand? So this is definitely where your take profit, your entry is going to be. You can keep your stop loss just below this structure here. Then your TP would be actually this size. If you want to go much higher, because you know that this is a weak high, and mostly weak highs are mostly broken almost 70% of the time. So you can set your break even here, expecting price to break all the way to the upside for you to what? Continue on that particular trend. So if you're actually looking at this trade which I took this afternoon here on US 30, we're in a strong uptrend. You understand?